Good morning, investors. You are now on KleverStock with me, I'm Jaria, serving you the latest morning bell updates. Kicking off with the opening bell updates on our local market. Bursa Malaysia opened higher on Tuesday but pared its early gains as investors locked in profits following recent advances despite positive cues from global markets. At 9:10 a.m., the APN KLCI slipped 1.93 points to 1,616.45 from Monday's close of 1,618.38 after rising 1.85 points to 1,620.23 at the opening bell. Market breadth was slightly negative, with decliners leading advancers 192 to 146, while 304 counters were unchanged, 2,082 untraded, and 36 suspended. Turnover stood at 203.18 million shares worth 101.14 million ringgit. Rakuten Trades Union Berhad Vice President of Equity Research Stong Pat Leng said it was another record-breaking day on Wall Street as all three major indices closed at new highs after the United States and China reached a preliminary framework deal. He said, meanwhile, the 10-year U.S. Treasury yield eased to 3.99%. Back home, Thong said APM KLCI is expected to trade within the 1,615 to 1,630 range today. Among the heavyweights, IHH Healthcare gained 2 cents to 8 ringgit and 37 cents. Maybank added 1 cent to 9 ringgit and 92 cents, while Public Bank and CIMB Group were flat at 4 ringgit and 92 cents and 7 ringgit and 45 cents respectively. Tenaga Nasional slipped 8 cents to 13 ringgit and 28 cents. On the most active list, Power Technic Group added 3.5 cents to 38.5 cents, while Perak Transit and Tanco Holdings gained half a cent each to 34 cents and 89.5 cents, respectively. Land & General and Borneo Oil were flat at 15.5 cents and half a cent, respectively. Top gainers included Malaysian Pacific, which advanced 20 cents to 30 ringgit and 74 cents. Telekom Malaysia added 8 cents to 7 ringgit and 34 cents. DKSH Holdings rose 7 cents to 5 ringgit and 10 cents. Vitrox Corporation increased 6 cents to 4 ringgit and 72 cents. And MI Technovation gained 4 cents to 3 ringgit and 10 cents. Top losers included Fraser and Neef, which dropped 30 cents to 28 ringgit and 24 cents. Petronas Gas eased 12 cents to 18 ringgit and 48 cents. Petronas Chemicals declined 6 cents to 4 ringgit, while Kellington Group and Solavest slipped half a cent to 5 ringgit and 59 cents and 3 ringgit and 4 cents. Moving on to local currency updates. The ringgit continued to open higher against the US dollar on Tuesday, buoyed by recent US-Malaysia trade deals that have increased appetite for the local currency. At 8 a.m., the ringgit appreciated to 4.2040 or 4.2140 per US dollar from 4.2085 or 4.2135 at Monday's close. Bank Muhammad at Malaysia Berhad Chief Economist Dr. Muhammad Afzal Nizam Abu Rashid said the signed deal should have a positive impact on the ringgit as Malaysia continues to maintain good relations with foreign countries. He said the nation's foreign and trade policies are consistently geared towards promoting greater global integration, especially in areas related to the supply chain. Meanwhile, Muhammad Afzal Nizam said the US dollar index declined 0.17% to 98.783 points amid optimism that the United States and China would reach an amicable trade deal ahead of the meeting between the two leaders on Thursday. At the same time, anticipation of a 25 basis point interest rate cut by the US Federal Reserve on Wednesday also added to market euphoria. He said in light of the market optimism, the ringgit could make another attempt to break the 4 ringgit and 20 cents level today. At the opening, the ringgit is also traded mostly higher against major currencies. It climbed against the Japanese yen to 2.7538 or 2.7606, gained against the British pound to 5.6077 or 5.6211, but slipped versus the euro to 4.8981 or 4.9097. The local note traded stronger against most ASEAN currencies, edged up against Singapore dollar to 3.2433 or 3.2513, edged up vis-a-vis the Indonesian rupiah to 252.9 or 253.6, and strengthened versus the Philippine peso to 7.13 or 7.16. However, the ringgit weakened versus Thai baht to 12.8767 or 12.8915. Continuing with more economic updates, the new trade deal between Malaysia and the US reflects the government's careful negotiation strategy to safeguard domestic industries while enabling their deeper integration into global supply chains. Federal of Malaysian Manufacturing (FMM) President Tan Sri Soh Tian Lai comments the new agreement that maintains the tariff at 19% but exempts key tariff lines on Malaysian exports. In a statement, Soh said this structured transition reflects Malaysia's careful negotiation shared to safeguard domestic industries while positioning them for deeper integration into global supply chains. The framework also provides clarity and stability for investors, encouraging collaboration between Malaysian and US firms in high-value manufacturing and digital sectors. Under the agreement, the exemptions cover key sectors such as palm oil, rubber products, cocoa, aircraft components, and pharmaceutical-related items, collectively valued at $5.2 billion or approximately 12% of Malaysia's exports to the US. Soh said without this agreement, Malaysia would have been exposed to a wave of new US tariff measures announced in recent months. Washington proposed 100% tariffs on semiconductor imports from firms and do not move production to America. 50% tariffs on 50% tariffs on kitchen cabinets and bathroom products, and 30% tariffs of upholstered furniture. He said there have also been signals of future action on branded or patented pharmaceuticals, which is not supported by the production in the US. The measures reflect a broader strategy to push manufacturing back to the US and impose higher costs on producers operating abroad. The reciprocal trade agreement protects Malaysian exporters from being caught in these sweeping actions and ensures continued access to the US market under stable and predictable conditions. Soh said Malaysia's tariff reductions and related commitments will only be introduced in stages so that adjustments happen smoothly in the coming years. This phased approach applies across product categories and includes changes to excise duties, sales and service tax, and technical and pharmaceutical standards. Soh said the bottom line is that the agreement gives Malaysia's manufacturing sector breathing space, continuity of market access, and a stronger foundation for investment. The challenge now is to turn these terms into concrete results. Industry and government must work together to accelerate capacity building, move up to the value chain, and fully leverage the exemption and implementation package to enhance Malaysia's competitive position. Moving on to corporate news update. Practice Note 17, PN17 company K&M Group Berhad will be delisted from the official list of Bursa Malaysia Securities Berhad on November 5th, following the rejection of its regularization plan by the stock exchange. In a filing for Bursa Malaysia, K&M said it has decided to withdraw its appeal against the delisting decision and has submitted a formal notification to Bursa Malaysia Securities. It said following the withdrawal of the appeal, the company will abide by the decision. Accordingly, K&M Securities will be delisted from the official list of Bursa Securities with takeover effect on November 5th. The company said the decision was made after careful deliberation by the board, taking into account the best interests of all stakeholders, including shareholders, creditors, and employees. K&M has engaged in several sale and purchase agreements (SPAs) to divest non-core or underperforming assets, aiming to alleviate financial burdens and streamline operations. KNM added that the successful completion of its SPA is crucial to its financial stabilization efforts, noting that pursuing the appeal could affect the SPA's completion schedule. The group said that a 35-year track record and presence in the process equipment and manufacturing industry, the board is retained working capital. The board is confident that the 100 million ringgit retained working capital will enable it to rebuild and revitalize its operations. It added that the bid will focus on the operational and financial turnaround of the group at the company's financial health is restored, and the board will consider the releasing of KNM subject to financial performance and requisite approvals. Shares of KNM last traded at half a cent yesterday. And finally, wrapping up, we have major corporate developments and deals across Malaysia. KNM Group Berhad plans to proceed with its 1.34 billion ringgit sale of Deutsche KNM GmbH, which it says is critical to stabilizing its finances, and in the process withdraw its appeal against its looming delisting by Bursa Malaysia. Tenaga Nasional Berhad said the Inland Revenue Board of Malaysia's confined against the High Court's decision that set aside the 78.5 million ringgit in additional tax assessments issued to its unit Southern Power Generation Sdn Berhad. Malfa International Berhad has sold its entire 33% stake in the London Marriott Hotel for 190.3 million ringgit to fund working capital requirements and venture into new investments. DXN Holdings Berhad said the company has plans to establish a mini coffee processing factory in Minas Gerais, Brazil. LBS Bina Group Berhad has formalized a joint venture with Oriental Holdings Berhad to develop a mixed-use project in Melaka, with the first phases 1A and 1B, estimated at 600 million ringgit in gross development value. Now that's a wrap for Moneyball Updates with me, I'm Jaria on KleverStock. Thank you for choosing us, investors. Stay tuned for the next live coming soon.